This is Business Incorporated this Monday, December the 12th. I am Bosun Omofaye here at Channel's global headquarters in Lagos. Coming up within the half hour, Egyptian stock market defies Sunday's cathedral deadly attack. And Nigeria's junior oil minister tells Bloomberg Television he's optimistic on latest OPEC and non-OPEC deal. Meantime, Nigeria's Dangote Cement sorts out gas pricing issues with Tanzanian authorities. Let's kick things off from the African continent, where North Africa's largest market in Egypt was very active on Monday, shaking off Sunday's deadly Coptic Church cathedral attacks, in which some 25 people are reportedly dead. Today, trading on the Egyptian Stock Exchange was delayed for 1 minute in honor of innocent citizens killed in the Sunday attack. The EGX 30 index was stronger at nearly 1.2% at 12:30 p.m. Nigerian time. That's about an hour ago on Monday, ramping up the stock index year-to-date above 62%. In Nigeria, the markets are on one-day holiday for the celebration of the birthday of Prophet Muhammad. Meantime, Africa's largest stock market in South Africa was higher about 0.25% in afternoon trade Monday. That's above 15,500 reading for the GSE. Now we move to the Middle East, where the market's still in session, most of them for this Monday. The Saudi and Qatar stock markets posted broad gains on Sunday after OPEC and non-OPEC oil producers agreed to jointly shave all output in a drive to prop up prices. Saudi main index was up 1.1% in heavy trade on Sunday, led by Saudi International Petrochemicals' 4.0% gain. In Qatar, the index added 1.3%, climbing above technical resistance on 200 day moving average. In the United Arab Emirates, Bahrain, and Egypt, the markets were shut on Sunday to mark the birthday of Prophet Muhammad. Today, the Middle Eastern markets are in full session as we speak. Let's check with some of the indices that you see there on your TV screen. The Abu Dhabi market about 0.75% to the north. The Dubai financial markets are ramping up massively, nearly 3%. The Qatar Stock Exchange at 10,208, about 12:30 Nigerian time, 1.40% in the green. And the Saudi stock market about 0.5% negative, 7,109. One of the big stories over the weekend was the OPEC and non-OPEC oil producing states agreeing to a total haircut of about 1.7 million barrels per day. So prices shot up 4% to their highest level since 2015. Early today, after OPEC and non-OPEC over the weekend reached their first deal since 2001 to jointly reduce output, aiming to rein in oversupply and prop up the market. This is one of the big market moving news as we start a brand new trading week around the world. Let's cross over to Frankfurt Stock Exchange, where my colleague Conrad Bilson of WTV for Channel Television is on standby. Good afternoon. It's good to see you again, Conrad, and hope you had a very nice weekend. Let's start with the rally that we're seeing around the world. Oil prices almost $60 a barrel, about 55 as we speak, following those decisions last week. Do you think this news will prepare the market for the remainder of the week as we start the new trading week in Europe?
Well, Bosun, I think it's a bit of a premature and daring presumption to make, and for two reasons. Reason number one is that we have seen those announcements of production cuts in the oil market, which has driven the oil price to the highest level in more than a year. But you know, announcing production cuts is one thing, but really seeing them happen is quite another thing. The history of production cut announcement of OPEC and also of other countries that are not OPEC members is not very convincing. Often the production cuts like this were announced, but never really they were put into effect. So it's quite possible that the driving effect of the announcement on the oil price will be short-lived. We are going to see this in the course of this week. The reason number two, and here I'm talking about the potential effect on the equities prices here in Western Europe. Of course, higher oil prices has both positive and negative effects and implications for investors and for companies here. A higher oil price means higher consumer price inflation, which is not a bad thing given that, you know, everyone on the market recently still talked about deflation. On the other hand, higher oil prices mean higher costs for companies, they mean higher petrol prices for consumers, so they also have a dampening effect on consumer sentiment and potentially on business sentiment. So the positive effect of the rising oil price on equity prices is likely to be very limited here in Western Europe.
Conrad, sometimes perhaps we need to be a little bit careful what we wish for. There's always a downside and upside to these situations all the time. But the big story this week from the United States, the world's largest economy, is the FOMC meeting, the final one in 2016. What are the markets expecting from Janet Yellen on, this week, aside the likelihood that there will be a decision on the Fed fund rate?
Well, Bosun, you're right. There's one expectation which is more or less already priced in, and this is an interest rate hike of another quarter of a percentage point. Only a minority of people on the markets believe that the Fed will raise interest rates in the US more than this. What now everyone will be focused on next Wednesday is what the Federal Reserve, or better, what the chairwoman of the Fed, Janet Yellen, will have to say in terms of expectations. You know, Donald Trump and the president-elect in the United States announced things he plans to do for the economy in the US, which likely have quite inflationary implications. So this might mean that next Wednesday the Fed is likely to talk about its inflation expectations for next year. At the moment, market expectations are that the Fed will increase interest rates 2 more times in 2017. But if inflation's expectations are rising, it's likely that the Fed hikes interest rates more than 2 times in 2017. Everyone here will be waiting for the statements coming out of Washington and for the inflation outlook that the Fed will give.
We're hanging in here also in Lagos, keeping an eye on that. You can keep your eyes off the United States, whatever you do. But talk to us about headline-grabbing news across the European market. Of course, the Monte Paschi's Italian bank, new capital on one hand. The Qatar investment is investing $2.6 billion in Glencore Rosneft deal. That's quite a big news. What else is grabbing the headlines as we start a brand new week, Conrad?
We're talking about a lot of mergers and acquisitions stories with, you know, Extron, the German company that the Chinese wanted to take over. This takeover has been called off, and now, of course, people here in Germany, especially at this company Extron, are concerned about this. But you mentioned 2 of the major stories already. Monte dei Paschi, the Italian bank, still seeking 5 billion euros from investors. That's an ongoing story. That's probably going to, you know, be an important story for the markets all week. And the major story, I would say, today is this investment of Glencore and the Qatari investment fund into Rosneft. They take over 19.5% of Rosneft. Glencore is a company based in Switzerland, and Qatar is a country that also has not so strong sanctions against Russia. So we can see here 2 companies and countries which are not involved in too heavy sanctions against Russia, profiting from this, profiting from the fact that they, you know, are not so much against doing business with Russia at the moment. And also, what's very interesting in this regard at the moment is that, again, I will be talking about Donald Trump, I'm afraid. Trump is expected to announce his candidate for Secretary of State this week, and one of the major candidates which are potentially becoming Secretary of State in the US is the boss of ExxonMobil, Rex Tillerson, a man who has strong ties with Russia. ExxonMobil has 10 joint ventures with Rosneft, and of course it's going to be very important and interesting to see this week whether Tillerson becomes Secretary of State in the US, because this would mean, you know, that probably we are going to see an end of the sanctions of Russia against of the United States against Russia during the presidency of Donald Trump.
Conrad, thank you very much. We have a lot to chew together for the rest of the week. Stick around there. See you on Tuesday. Tomorrow we'll be back at the same time, live from the Frankfurt Stock Exchange. Conrad Bussen there for Channels Television.